Welcome to the TAC Index AI podcast, where we blend TAC Index data, reports, and charts with the latest news in all things logistics, with a real focus on air cargo and, its ripple effect on the broader market. Today, we're taking a deep dive into recent air freight movements. We want to connect them to the ever-shifting landscape of global trade and the macroeconomy. You might actually be surprised by some of the subtle trends hiding beneath what looks like, pretty quiet data on the surface.
It really is striking how interconnected it all is, isn't it? For this deep dive, we're looking at the latest TAC Index Air Freight report. That's from July 22nd, 2025. And we're layering that with insights into global trade deal hopes, those ongoing tariff discussions, and what the big shipping companies are doing strategically. It's all part of a very complex kind of living system.
Okay, so let's dive into that TAC Index data then, see what's truly going on. Globally, air freight rates, they were very slightly lower last week.
Yeah, that's right. The main index, the Baltic Air Freight Index, BAI00, it dipped just 0.3%, very small move.
Yeah. Which is interesting because we're in what's normally the quietest season, right? But you're saying there are underlying shifts happening.
Indeed. I mean, while the global index shows that minor movement, if you look regionally, it's a much more complex story. For instance, rates out of China, so Hong Kong BAI 30, Shanghai BAI 80, they saw slight week-on-week declines. Not dramatic, but down. But then you look at Europe, specifically Frankfurt BAI 20 and London BAI 40. We're seeing significant gains there. London actually is up by, a whopping 44.1% year-on-year.
Wow, 44%?
Yeah, its highest level in 2 years. And that seems to be boosted mainly by Southeast Asia routes.
Okay, that's a really stark contrast then. China down slightly, London way up. So these regional air freight dynamics, they're clearly quite different from the overall global picture. How does this fit into that broader narrative? Trade tensions, the macro market stuff. We've got this quiet overall season, but everyone's still worried about tariff wars.
Well, this really brings up that important question about how policy and market sentiment interact, doesn't it? We're seeing, trade deals shaping global markets. European and Japanese stocks jumped recently on hopes, mind you, of a U.S.-Japan trade agreement, specifically one that lowers auto tariffs down to 15%. And that optimism has sort of spilled over, raising hopes for similar deals, like maybe between the EU and U.S. markets, like good news, even if it's just potential news.
Right. And here's where it gets really interesting for me. On one hand, you've got that market optimism you mentioned reacting positively to hopes of deals. But on the other hand, the actual impacts of tariffs, they're showing up loud and clear in corporate earnings. Like General Motors, they reported a massive hit to their profits, didn't they? Over $1 billion just for GM alone, blamed on tariffs.
Exactly. It's a powerful example of the real-world friction. And it's not just manufacturers. The shipping industry itself, the ones moving the goods, they're already navigating this.
Right.
Look at Maersk. The U.S. is proposing these hefty port fees on China-built or operated ships. Big deal, right? But Maersk seems to believe it can just reassign its fleet maybe about 10% of their vessels to avoid these costs, and crucially, without raising prices for you, the client.
Huh. So they think they can just sidestep it.
That seems to be the plan. It really highlights the industry's flexibility, and maybe some doubts about how effective these policies will actually be, especially given, let's call it a history of policy flip-flops or sudden shifts in the past. Industry gets wary.
Yeah, and we have seen dramatic swings before. I remember China's exports to the U.S. just plummeting after those first big tariffs went on. But then they surged right back during that temporary trade truce we had a few years back. So it feels like while the big market indices are hitting highs, maybe fueled by hope, the actual logistics sector is just constantly scrambling, adapting. Does this agility we see in ocean shipping, does that mirror what's happening in air cargo too? Or are the pressures different there?
That's a really good point. I think the adaptability in ocean shipping, companies like Maersk, MSC adjusting ship sizes, creating these flexible networks, it's a powerful lesson for the whole logistics world, definitely including air freight. Air cargo operators, sure, they deal with different assets, different speed demands, but they face similar pressures. They have to optimize routes, manage capacity, react fast to trade shifts and policy noise. And look at Maersk's investment in that new Shanghai warehouse. That's about building end-to-end solutions, right, which helps streamline things for both their ocean and potentially their air operations. It just shows how the industry responds to volatility. They adapt rather than just wait for clear policy signals.
Right, they're proactive. So for you, the listener, trying to grasp the core dynamics here, what's the main takeaway from all this complexity?
I think it means that even when air freight rates look quiet globally, like now, you have to look underneath. These undercurrents of trade policy, company earnings, the strategic moves logistics firms are making, they're constantly shaping the flow of goods and ultimately the health of the global economy. The real story, the deep dive, shows logistics isn't just reacting, it's actively shaping things too.
So here's something to think about. We see this relative calm in global air freight rates right now and market optimism about trade deals. But given this ongoing tension between what policymakers intend with things like tariffs and the shipping industry's incredible, almost defiant adaptability, how might that tug of war continue to reshape global supply chains in ways we perhaps don't expect? Definitely something to mull over until our next deep dive.